Hello, everyone, and welcome to the Buck Stops here. I am Catherine Murray. Well, we certainly have been witnessing markets with major swings with the ongoing conflict in Iran, sending oil prices spiking, injecting fresh fears and volatility into the global equity markets, and also raising concerns about inflation and supply chain disruption. A lot going on. And here to help break it down for us and where to invest right now is Ian Shaffer. He's the founder of Galliant Advisors. Ian, great to be with you today. And I know we've been talking for over a decade. I want to understand a little bit, and I think our viewers do, in terms of how you're navigating the markets today.
Well, we've seen, unfortunately, especially over the past 5 to 6 years, we've seen a lot of these geopolitical events. October 7th, the Russian invasion of Ukraine. And we've seen, we go back to history and we see how long do these geopolitical events actually affect the stock market. And we're not talking about in magnitudes of months. We're talking about on average, it's weeks that it's measured in. So let's say, for example, our current situation with Iran started at the end of February. By the end of March, let's say that 3-4 week period, that's when the market started to rebound. So we think this was just a buying opportunity that, yes, do you want a war? No, but are you going to change your investing strategy because of a war that should be short term? Definitely not. So, just like any sell-off, what you want to do is, make sure that the names that you're left with are high quality. Use the sell-offs on names that are on your watch list to upgrade the quality of your stocks. And, always be looking for opportunities to say, okay, this is mispriced. You might sell some names that maybe didn't get as hurt in the war, but you might think that they will. But for the most part, it's just an opportunity to buy on the dip. People always look for reasons to say, no, this is different. I don't want to buy. It's buy low, sell high. Doesn't matter the reason. So if the war gives you that reason, that opportunity to buy low, you take advantage.
I agree with you. And I think that having been in the market like yourself for a very long time, it almost makes it maybe easier, although there's many professionals who still find it very difficult to do exactly what you're saying. And part of the reason now is because people don't know how long this war will be. Will it be a prolonged war? And that's really been the key and critical issue as to why people might not be buying the dips because they are concerned about inflation, supply chain disruptions, and the potential for a recession, whether it's in their own country or globally. So that's been a little bit of the pushback. And the question, of course, then is, well, buying now, is that the right price or do they go lower?
When there's a sell-off of any type, even if you go into the real recessions, the great financial recession, 2022, 2008, there are always people who are going to come out and say, you haven't seen anything yet. We are going way lower. As I said before, there's one rule in investing. If every investor can just adopt the one rule, they will be successful. Every time you buy a stock, ask yourself if you're buying low. Now, are you buying at the absolute low? Who knows? But are you buying when you were originally looking at the stock, are you buying at a lower price? Is it near the lower end of its 52-week range? Is it on the lower range of the multiple that it's historically trading at? If the answer is yes, and you want it, don't look for excuses not to buy it. You buy it. If you think at Ukraine, people said, oh my God, this war is it's going to last a while. It's been 4 years. Has that stopped the market?
Yeah.
People, unfortunately, we normalize to these events. So, even if you go back to Pearl Harbor, I mean, these events just don't, unfortunately, maybe they should, they're more meaningful, but the market is always forward looking. So it's not just about what's happening today. Yes, there's a knee-jerk reaction usually to sell, but after a while, people saying, you know what? That was a vacuum of news. There was no earnings news in March. So people were focused on the macro. Now it's micro. Now it's earnings season coming up. Why do I care so much about this? Trump seems to have it under control. I think I'm going to start looking for opportunities. And then, as you've seen in the first few weeks of April, you fully retraced everything that you lost in the Iran war. So for those sitting on their hands or those not taking opportunity, it's a missed opportunity. Now, to buy it now, well, if you weren't buying it then and the war is still going on, it's hard to say you should buy it now. But if you were always a buyer, I think, the opportunity was there. Always nibble along the way. That's what we think.
Yeah, no, it's a great point. And it does require you to be diligent, know the names that you like, watch them, and look for the opportunities to step in and buy from a valuation perspective. As you mentioned, we are in the midst of earnings season, so we do get a lot of information from companies and corporate commentary. We'll take a quick break. We'll be right back.
Sure.
And we are in the midst of earnings season, and we are getting a lot of information from various companies. And it seems as though the sentiment towards the earnings results has been positive. What's your view right now as you look out at some of the key companies that you're following and own?
Listen, having been doing this for over 20 years, it's very tough to make sure that to come out of earnings season unscathed. What that means is, can you be sure that your companies are going to go up on earnings? Now, we would love for that to be the case at all times. However, the reality is, even if our team, any team on Wall Street, had the earnings results ahead of time, I don't know that most people would bat over 500 in terms of saying, even with the results, how the stock will trade the next day, because there's metrics that we don't know. There's a comment that's made on the conference call. So really, what is the goal of earnings season for a portfolio manager? It is to make sure that the story that you're investing in is intact, so that you can invest in the stock
Yeah.
for new clients who are coming in, and to make sure you can hold it, you can sleep at night. It isn't necessarily that to make sure that the stock goes up the next day, although that's nice. Now, next week, we are having a Super Bowl extravaganza of tech earnings. In all the years that I've been I've been invested in this area, I've never seen all big horsemen, and I'm talking Amazon, Google, Microsoft, Meta, all line up to report on the same day. I've never seen Amazon not report in the last week of the month on a Thursday. I know it sounds strange, and I don't know what to make of it. I've asked my team to start looking around and poking, asking questions as to why this is the case. But Amazon is a Thursday reporter, and they intentionally move their report to Wednesday to align themselves with the reporting dates of the other mega caps. So that's a little strange. And now, are they trying to say, well, everyone's comparing the CapEx spend on Google, Microsoft, Meta to us, so you might as well have it on a level playing field and discuss it all together? It's hard to say, but I will say that we are bullish. We're bullish on Amazon. The forward valuation for next year is trading at 20 times. They have so many levers. They're getting into, we're going to talk about SpaceX, but they're getting into a big portion of SpaceX's business, this Starlink business, with their purchase of Global Star satellites and Amazon Leo, which is their Starlink equivalent. So they really are, and then if you add Jeff Bezos' Blue Origin business, if he eventually rolls that into Amazon, you have a true competitor to SpaceX in all regards. The only one thing I want to say for those watching Amazon, Q2, it's forgotten many times by analysts, but the second quarter, when they give their guidance in Q1, they will say, when they report Q1, they will give guidance for the second quarter. People always underestimate that in Q2, they have increased stock-based compensation. So sometimes people, when they report Q1 and they give their Q2 guidance, operating income is lighter. What Amazon did, and I can say they did this to make sure that that number doesn't come in light, they moved Prime Day, which is typically a Q3 July event, into June, which is a Q2 event. Now,
Interesting.
what that'll do is enable them. Yeah, this is very interesting. It's two things that I've never seen Amazon really do. Now, it's smart because Walmart and the other firms, they all copy, the Prime Day event and piggyback on it because they know that people are looking for sales that day. So, Amazon just might be saying, you know what, don't, don't, get benefits off our coattails. We're going to move it to a day you didn't know about in late June, and we'll reap the benefits on their own. However, it also might have something to do with making sure that their guidance next quarter is above what is typically below, just because of the benefit from Prime Day. So we'll see. It'll be very interesting next
Yeah.
Wednesday.
I Where do you think sentiment is on the stock?
Amazon, it's tough. Yeah, we're talking about someone here who, when it was 100, I said it was going to 600. They laughed. You know, I was clear that Jeff Bezos was the next visionary after we lost Steve Jobs, and you know people can argue that maybe Elon Musk is that right now, but the two of them are pretty close, neck and neck. Amazon doesn't trade well on earnings. the biggest run on Amazon is usually in between earnings when it kind of has when people aren't scrutinizing every metric. So I can't say that, I'd say in between earnings, that's when the sentiment is better. After earnings, people would say, oh, it's all about AWS, and if the number comes in above 24. I'm telling you, I've had metrics prepared to review 10 of them that I needed Amazon to hit. They maybe hit 11 of them. And the stock still sometimes goes down, usually goes down on
Ev-
earnings because someone is nitpicking on some metric that no one thought of, increased capex beyond expectations. So it trades on earnings as if the sentiment is really bad. In reality, Bill Ackman and other big, investors really like the stock. It's fundamentally very cheap. They're getting into NVIDIA's business with this Trainium chips. They're getting into,
Take a quick
SpaceLink's
break.
business and SpaceX's business.
We'll take
Yeah.
a quick break. We'll be right back. And just to wrap up the Amazon conversation, in terms of the sentiment towards the stock, I don't even mean during earnings. I mean just the institutional interest in owning Amazon. It doesn't seem as though it's there. I mean, I know you mentioned Bill Ackman, who's a famous hedge fund investor, but when you sit back, do you believe that investors are not appreciating the story? And for everybody to understand, you and I have been talking about Amazon uh for a decade when it was 100 and you said it was going to 600, et cetera. And you've been completely right on the fundamental story, Amazon's fundamental story. Do you think people are missing the story?
I think so. I think so. I think, the focus, CapEx, before that, it was slowing AWS. They always have a reason to sell it off on the earnings. But then when they step back and they say, wow, look at this company. I mean, we talked about how this company, the low cost online retailer, had gotten to 50% gross margins across the business. I mean, it's unheard of. No one even talks about that. So, their efficiencies, AWS leadership, it sounds like they've really gotten, that ball rolling again. So they're the biggest cloud provider out there, and they're making deals with OpenAI and Anthropic. So they're positioning themselves so well. Now you add on top of that
Yeah.
the Starlink business, the Trainium chips. There's just no stopping them. This is the one company you never have to worry about other levers for growth because Amazon,
Hmm.
with their medical, they just keep finding more avenues for growth. So, it might be. I don't think it's institutional leadership that they don't have. I think maybe the retail hands when they don't like to see the way it trades. I think they maybe sell it off or don't want to own it. But it always comes back. And typically, last year was a up 5 year. So typically, when Amazon doesn't perform big, it usually does in the second year. So I think this year will be very big. I wouldn't be surprised to see a 300 on the stock
Okay.
later in the year.
Okay. One of the key themes that we need to talk about, and you mentioned it very briefly, is AI. That's certainly been running the markets on many fronts, whether it's capex or putting downward pressure, significant downward pressure on software stocks. Where do you stand on AI investing?
So it's definitely important to have exposure to AI, and we do. And our firm did a really big deep dive on AI. Once we saw the impact to software and all that, and we really wanted to get the entire understanding of the ecosystem. And so we mapped it out over the past 6 to 9 months. And our strategy has become: it's too early to pick the winner. There's going to be a lot of winners and a lot of losers. So dabble in, 3 or 4 names and let that be your AI exposure. Don't bet the farm on one stock alone. For example, it could have been NVIDIA and the semiconductors. If that's your AI play, well, when the semis ran too much, the investors ran to the next level. So what I'm saying is if you have a position, Vertiv is one company that we talked about in the past, about a year and a half ago when it was around 100, and that stock has gone to 300. Why? They're the leader in power management and liquid cooling for data centers. That's a very unique story. So if you can get these boring industrials that are part of the infrastructure build out of these data centers, and you're getting them at reasonable valuations, not all of them are reasonable, but if you can get them at
Right.
reasonable valuations, it's very interesting. And so our top picks, if you will, are in engineering construction. I think the Comfort Systems is the leader. FIX, it's too expensive for us. So we recognize that they're probably the leader with the most data center exposure. Our favorite is EMCOR, EME. And so they're number two, a little bit less pure play on the AI data center exposure, but Their backlog is increasing. And what they do is that they build the data centers, they clean the data centers. It's like the janitors, the cleaners, the nuts and bolts that go into providing and building the data center. So that's interesting. You might have a utility play. You have to think about who's going to run the grid, the AI grid of the future. Well, AEP, American Electric Power, is a boring utility, pays a nice dividend, and is partnering with fuel cell companies and power generation companies to basically power, like I said, the AI ecosystem for the future. So power and capacity are the two biggest issues facing AI, and AEP is a boring way to play it, and the stock has a lot more room to move. Vertiv, we spoke about again in liquid cooling. And I'd say one more company that maybe investors don't know well, Amphenol, APH. Now, this is interesting. They're the leaders in interconnect, okay, interconnecting systems. So what that means is how to connect the data to the computers, the data center to the grid. So you're connecting, to the power source. You're also connecting to the end consumer. And Amphenol provides fiber optic and copper interconnect systems, and also trading at a reasonable valuations. These stocks are trading at 25, below 30
Yeah.
times next year's earnings. So they're still trading relatively on a fairly valued basis, but their growth rate is just phenomenal.
Yeah, and it's interesting, and to go back to your important point, it's so critical at what price you buy a stock. So some of the names that you've mentioned, they might have attractive or not attractive entry points. What's a name that you'd be putting new money to work in today?
So a name that we really like, and in an ideal world, Catherine, our firm finds a great growth story, and they complement it with a catalyst or an event that's coming up, hopefully in the next 6 to 12 months, that'll help get the stock to move in the direction that we want. Take Two Interactive is a specific company that's exactly like that. They are the last publicly traded pure play video game maker after EA and Activision were acquired. So that's one thing. There's a scarcity value there. So there's potentially a premium that should be built into the stock, is knowing that one day it could be taken out. But the bigger story is, come November, Grand Theft Auto 6 is coming out. This is their behemoth video game bestseller. It's been over 10 years since the last release. This is a big catalyst that was moving the stock up. We couldn't get involved in it last year, until very late, because the stock was so high. And then thankfully it had a little bit of retracement. But because of this software sell-off that you were citing before, some reason people are lumping Take Two into, I think software names that are getting hurt from AI. I think Take Two and video game makers are going to suffer from that as well. They have such a loyal fan base. This is such a specific company with a specific game that is so much loved by the video game community. So, whatever impacts AI have, which I don't think will be significant on a company like Take Two, it's not going to impact them in the short term. So, the hype of the game is really going to start coming to fruition when people start seeing the trailers. You want to get in before that occurs. So I think the stock, the last we checked yesterday was down about 15% year to date. So it hasn't retraced all the losses. I mean, it retraced some, but it was sub
Yeah.
200, but it hasn't even gone back to break even. I think this is a great opportunity to invest in a company that should move well higher come the end of the year.
Okay, an interesting name to take a look at. I haven't really looked at that in a long time, but I'll
Yeah.
take a quick look. And then, of course, the other item that investors are looking forward to is hopefully a more robust IPO market, and that might be led by SpaceX going public. How are you maybe investing in SpaceX, because it is a private company now? Are there offshoots to this that you can invest in?
Yeah, I think, whenever you see, let's say the valuation where people are anticipating that the IPO of SpaceX might be around 1.75 trillion to 2 trillion. I should say, though, when people think of SpaceX, it is not just SpaceX. They merged XAI into this conglomerate they're calling SpaceX. Their Starlink satellite business is also embedded in it. Twitter, or X, whatever you want to call it, is also embedded in it. So there's a lot of companies that are making up SpaceX that is more than just, the name. So, but at the end of the day, when there is hype about this IPO, there's certain names that tend to move. Rocket Lab is one, RKLB. I think the focus that I think the moves that you've seen in Amazon, a recent purchase of Global Star. Now they have this
Yep.
Amazon Leo that was called Amazon Kuiper just not maybe a year ago. They're really trying to launch this broadband access across the A, the country, and B, the world, like Starlink has. And in the next 2 years, by 2028, they're going to be very live and very competitive to Starlink. So that business is going really well. And this acquisition of Global Star really shows what Amazon's intentions are to be a comp of SpaceX. So you might see a re-rating of Amazon's business, and people saying what the value of the Amazon Leo business is when SpaceX actually goes public. So I wouldn't say buying Amazon here, but owning Amazon and getting an extra benefit when SpaceX IPO occurs, you might stand to really benefit. But at the end of the day, keep in mind, if you are holding names like a Rocket Lab or some of the smaller tier satellite players, they may be treated as a source of funds once SpaceX IPO occurs, because people will want to actually own the real one, the one that they're most excited about, rather than the only publicly available traded one today.
Right.
So keep that in mind. But yeah, it might be too rich for our blood once SpaceX IPOs, but we'll do the homework and do the valuation work when it happens.
Yeah. I think it'll be one of the most highly anticipated IPOs in many, many years. I'm looking forward to it. Ian, great to see you. Thank you so much for being with us.
Thank you.
Thank you. And thanks for watching. We'll see you next time.